Good afternoon. At least it's afternoon for me. Hey, everybody. Good to see you again. This is Greg Jensen from Options Animal. Welcome to the Everyday Trader. Glad to be here again after a little bit of a hiatus. Been a week or so since we did an episode, but Eric, good to be with you, my friend.
Yes, I'm actually in the Bahamas today, so living the dream. Because I can't be in my house because, as you saw the pictures that I've been sharing, we've got remodelers, and our house has been gutted. So probably another month of living like we're camping out of boxes and yeah, no
Hey,
running water on our first floor.
that's
And
fun.
yeah, it's fun. So yeah, that's part of the issue last week is it's banging and pounding and all kinds of stuff going on. It's been crazy here. So but
Well,
anyways,
a bit has happened since we last did a recording. So, probably the biggest, I guess, event slash non-event was a Fed meeting last week where Jay Powell and company decided to leave rates unchanged. And we got a big candle up on that news, big gap up in the markets, and follow through today at least. But we gave a little bit of it back over the week. At the end of the day, I don't think the Fed really gave us a lot more information to say the market should continue putting risk on. As what I heard from last week's meeting was that we're data dependent and the market's going up. We're at all-time highs. Inflation is not controlled yet, so we're not cutting rates. Now, I will say that Jay Powell did say we do eventually rate cuts are probably likely by the end of the year. And I think he actually used the number three rate cuts are likely by the end of the year, but he still just used the word likely. But there does need to be more data that needs to come out to show that inflation is under control, which I know we're going to talk a little bit about that, but did you have a different opinion from the meeting last week?
yeah, I did. So we talk about the dot plots that come out every quarter. And so the dot plot asks the question of Fed members, what do you think the committee's position will be um, on these different dates? And so they ask, how many, where do you think we will be on these different dates? It is not the same question of what do you think we need to do? It's what do you think the committee will do? And that's the opinions that it's a different thing. It's like me asking, what do you think Greg would say versus what do you think, Eric? The answer is going to be different. Although you and I think a lot alike, and the Fed does think a lot alike, is that the dot plots was I'm thinking that my peers are thinking that we're all going to cut rates, and speaking to other chair people, and I've heard them individually, privately, one maybe, could be four, but it's going to be data dependent. That's the key. But something definitely became apparent to me last week on that move, which just really surprised me at how the market really took off when Powell started talking. The market was doing okay, then Powell started talking, it just went crazy. There's some other narrative that's out there that is explained that it's not necessarily. I mean, just look at this chart that you've got here that's happened since the Fed has been aggressive, or at least holding rates at what would be an elevated level. The market has just done nothing but tear higher. And I do go back to the conversation. One of these episodes, I used ChatGPT to determine what is the best scenario for the market. And it is hands down when the Fed doesn't change rates. That's when the market does the best. So it can actually go up in all three scenarios, and overall the market does tend to go up. But the Fed doing nothing is actually the best thing for the market. And I do think I asked this question in one of the sessions I had this week with some clients. Is we looked at a long term chart of the Fed funds rate, and I said, if you didn't know what this was and you looked at it, what's the average? The average is about where we're at. It's like 5%, like 5.25%. If you look long term and go back, to the 50s, this looks like where we're average. So maybe we're going to stay here, but I don't think the market is needing rate cuts. Obviously, it's not needing rate cuts. I mean, the economy is solid. Inflation is going up. You and I have talked about the fact that we think, or I don't know if you think, I think we're likely to see a second wave of inflation that comes over the next year or two. I think we're going to bottom out, but I do think we're going to see a second wave of inflation. And the Fed doesn't want to be caught. I know the Fed is aware of this. The last three times since 1900s, 1910 actually, that we've had inflation cycles, they've been double hump camels. There's one, it goes flat. If you did a chart 12 years, you'll see one hump, a flat period, and then another hump three times. And if you lay this year on top of it, or this cycle on top of it, starting in 2019, it's exact this 12-year pattern. It now, is it going to happen again? I don't know. But let's go to what are the other things that are happening out there. We'll talk about.
Before you go away from the other things, I just want to. So I'm just on Twitter while we're recording right now, and apparently our friend Chris Waller is speaking right now at the ECNY in New York this week, the Economic Club of New
He's
York.
talking about the economy.
He's talking about the economy, and he's basically saying that he thinks we need to hold rates steady, perhaps longer than is thought, because exactly what you were just saying, that the economy is strong. There is little risk right now of leaving rates where they're at. He does not see, even though we are seeing growth moderate a little bit in Q1. We're seeing that in a few places. Employment's at 3.9%. Markets are all-time highs from across the board. Gold's at an all-time high. Home prices are at all-time highs. I don't see the need to cut rates right now, even though that's what the market wants. The question is
Well,
the
does the
market?
market want it? That's the question. I mean, the
Yeah.
market's not getting rate cuts, and that's what we talk about in CNBC, which is just it's tiring. I would love to be on CNBC, but I don't think they'd invite me back because I don't, right? I mean, like we have nothing to say. Like the rate, the market's doing okay with that, whatever. Uh, I just this is 5,200 was Goldman Sachs forecast for the year.
For the year, and we're
We're
still in
there.
Q1.
We're there in Q1.
Yeah.
If you continue this trend, we'll be at 5,800. In fact, they've actually thought about they've mentioned that they're looking at three cases. They haven't officially revised yet, but this is the end of the first quarter, which is an important point. Quarters they're significant for a number of different reasons. And maybe some of this is window dressing. We could talk about that, but we're going to start seeing a bunch of companies revising their end of the year forecasts. Goldman Sachs floated in one of their newsletters this week. They may go to 5,800. It's not official yet. They have a bull case, kind of a middle case, and then a bear case as well. And 5,800 is not unreasonable.
Well, if that's well, I guess we'll see. You know what? I've been through bubbles before. I've traded bubbles before, and bubbles don't have to pop, by the way. They usually do. There's usually an event that comes down the road. Maybe it's a resurgence of inflation that causes the market to pop this bubble, but they don't have to. We could inflate up and the economy can start to catch up with it. I know there's a lot of money still chasing markets. Everyone's working right now who wants to work for the most part. We do have some cracks maybe in the commercial real estate space, and maybe that's why the Fed is talking about rate cuts. Is maybe they see something that they're unwilling to voice right now. That there's a risk somewhere in the financial plumbing
Well, didn't
of
you
the
just
system.
Waller chased? I don't think so. Didn't you
I
say
don't think
Waller
so
said
either.
today? Maybe not. I think they are always looking for on the horizon. It's a tough job to have, but I'm not surprised by those comments. That's exactly what I expect to hear. We'll see if did the futures move because of it. I don't know.
Actually haven't looked. Let me see. Markets. Bitcoin's down 800 bucks. I don't think that. Wait, are the futures even open right now? Yeah, they are. And we're down 3 points on the S&P futures.
Well, that's we're looking at the long-term chart here. One of the things we wanted to show was this chart here, which is the this is the last 3 days that we've had, which has been a really unique pattern. Greg and I were talking before we started recording, is that if we looked on Monday, I mean, it was a snooze fest until the end of the day, and we had a little bit of sell off. Then we opened up on Tuesday a little bit higher, and it was a snooze fest. And then we had a pretty big sell off into the close. And then today we had a little bit of choppiness, but basically a snooze fest. And then into the close, we had this run up. Uh, I don't, I don't know what to make of that.
To me, this looks like speculative markets to me. I think you've got people just the big positions are waiting until the end of the day to enter a position, and it's speculation. I think your standard people like um, Fidelity. I think your big mutual fund players out there, your Janices, your Vanguards, they're just buying the market consistently every day right now because that's what they do. Um, but I think the speculation right now has turned much more shorter term, and maybe this is an effect of some speculative efforts going on with more and more volume in the zero day to expiration options and the tail wagging the dog, so to speak. Because to me, when you see the S&P or the whatever it is, we use the S&P as an example, right? Any one of these indexes or individual stocks. When you see a market snooze fest all day long and then spike or crash in the last 30 minutes of trading, that's speculation of what tomorrow's open is going to be.
Mm.
And that's what it's a gamble right now. What does that mean about the overall markets? Probably not a lot, other than that this is not a market that's afraid right now of a big correction. I think this still portends to the idea that there's a lot of traders investing in the market right now. There's a lot of speculators. This bubble could keep inflating for now, um, until something stops it from inflating, which I don't see. Maybe in November.
I think you touched on it, and I didn't have time to explore this a little bit, but I do wonder how much of this could be, dealer gamma in response to 0 day options. It's definitely getting a lot more traction, and we're seeing the volume of these short term options, 0 day options, uh, going up and up, and certainly dealers have to purchase futures or sell futures depending on what their dealer gamma looks like. And it's not just gamma, actually. It's towards the end of the day, it's actually charm, which is how the delta changes with time. I was talking with Lex Lutheringhausen, is a former market maker, and he alerted me to that he's been doing these 0 day options and talked about how significant charm can actually be, and that the delta starts changing towards the end of the day. And there are ways to look at that data in the Trader Oasis platform to get a handle on that. But I don't know. I think it's been interesting to see that um, it's certainly something to add caution, something to keep an eye on over the next few days. So, speaking of the next few days, what are you looking at over the next few days?
Well, one of the stocks I've been looking at is Micron. Um, and
Hey, before we go to stocks, what about? I mean,
well, if you're
I was teeing you up for
if you're talking about
economics.
the like life, it's opening
No, no, no,
day.
economics.
Oh, economics. Dang it. It's opening day for baseball.
Oh, okay.
Next few days, economics, PCE, right? We got inflation. We got a jobs report next week, next Friday.
PCE's the Fed's preferred inflation gauge. That's
Yeah,
Friday.
and that's tomorrow, right?
Yeah. No, Friday.
Friday.
Today's not
So
Thursday, right?
market won't be open on Friday. We've
It
got Good
won't be
Friday.
open, right?
So it'll be interesting to see the reaction over the weekend if the futures do much. Monday might be an interesting day if we get some type of hot print on inflation. I think it's hard to look at what's going on at the gas pump right now and not realized that inflation could be doing exactly what you said earlier. Is we're starting to climb up that second camel hump of potentially a challenge for inflation. I just don't see the weakness causing deflation to stick around much longer. Um, when I think the main thing that drove it down to begin with was gas prices. And now that they're back on the rise again, oil up above $80 again. Yeah.
Yeah, certainly gas had
PCE.
a significant contribution to inflation. And it's a pay cut for people. It's almost well, of course, the solution for high gas prices is high gas prices. So we'll see what happens there. So the PCE on Friday should give us some insight, and that'll be February's number. And then on Monday we get or not Monday, next fall, the following Friday is the jobs report. So we'll take a look at that. Labor has been really, really strong, and what we have going on right now is it's actually a shortage of labor. So there's more jobs than there are people looking, and it's been really interesting that we've still had that situation going on. So we'll get some insight on Friday. I'm overall bullish, and I think we're going to still see positive stuff coming out economically, because I think this economy is definitely strong, strong. But then, okay, well, let's switch to stocks. What are you looking at for stocks?
So one interesting one that's on my radar right now is Micron. Micron had earnings last week, big gap up. In all honesty, I sold Micron before earnings. I had a position in it. I've been in it since, well, I've been in this stock for years and years, but this most recent position, I've been in it since about the 60s. And so when it moved from 60 up to 95, which is where I sold just before the earnings event, I decided that was a big enough profit for me, being up 50% on my position, because traditionally that's where I think it starts to get stretched. Now, obviously, they had a good earnings report. The market loved it. There's articles out there. There was just an article yesterday on Motley Fool saying, is Micron the next NVIDIA? And
No.
I don't think it is either. Well, there's some fundamental differences in Micron and NVIDIA. Even though they're both semiconductors, Micron does not have near the market dominance in their specific space of chips that NVIDIA has.
They're
Uh,
commodity.
and it's more of a commodity. You're right.
Right.
Memory, which
They
is
do have some
Micron's main
technology.
business, they do, and there's some benefits that Micron has that Nvidia doesn't. They manufacture their chips in their own plants, whereas Nvidia ships it off to Samsung or to Taiwan Semiconductor to have them manufactured. By the way, if you want a really good explanation, we need to get Barry back on here. By the way,
Harry's probably listening to us, nodding his head, going, "Yeah, why haven't you invited me?"
yeah, is he coming to Vegas? Do you
Oh
know?
yeah, we're gonna have fun.
Okay, that's good. That'll be good to see Barry again.
Hey, maybe we
But
get him on
again,
stage.
we could actually. We do that in Vegas last time? I
Did
think we
we?
had Barry come up. I don't remember. Maybe we did. I actually think we did.
Okay.
Anyway, if you haven't ever watched the presentation, because you're new to following us here on the channel, there's a presentation we did. I want to say it was about 6 months ago, maybe even longer than that now, where we talked with Barry Norton, who's an expert in the semiconductor space. So go do a search back through our videos. We don't have that many. And he does a really good job of explaining this whole space and some of the changes. I think it would probably be good to get him back on again to do an update, because I'd love to hear his opinion on Micron. To me, I think Micron's over its skis right now. It's way at
Look at the
120.
RSI.
Yeah, at 120, it's too high. Now, if this gets back down into the low 100s, back down to the 90 range, yeah, I'll probably look at gobbling it back up again. But it doesn't mean it can't go higher, folks. I'm not saying that maybe what they announced wasn't game changing, but in my opinion, their business model does not have near the same growth potential as Nvidia's does. I think this is another example of the state of the market. I think there's a lot of speculative money trying to find the next Nvidia, trying to find the next thing to chase. Maybe this is the one for a little while, but I'd be careful of chasing this one too much higher, in my opinion. Again, I'm not giving you investment advice here, but I'm not buying it up here at 120. If anything, I'm doing in the money covered calls, or, out of the money Costanza type trades, bear calls that I'm okay buying the stock if I have to. But yeah, to me, this stock's a little too high for my liking.
This is definitely part of the AI story because there are just so many NVIDIA chips that are going to be purchased, and everybody's trying to get into the video chips as well, the GPUs, graphic process units that NVIDIA dominates. But like Barry pointed out, is you don't need to be looking at the leading edge companies. You look at the lagging edge companies because if there's an NVIDIA chip in it, there's probably a Micron chip sitting right next to it because you're going to need memory as well. So these they don't get sold alone, and so I think that's part of the reason why we're seeing Micron and some of these other super micro is another name that's gotten a lot of attention. And for the record, I am very bullish on AI. I think that this is transformation that's happening in front of our eyes, and we'll look back and I'm not saying that you need to buy. How do you make money on it? I'm not 100% sure which stocks we need to buy, and maybe it is still Nvidia. Analysts keep raising the forecast on Nvidia, but uh, I don't know. I'm actually bullish on the overall economy. I saw a report from HSBC that talked about potentially something like a 5.9% increase in efficiency globally. And they went through and explained why in these companies that are going to see improvement. In fact, I saw a discussion about AI that talked about compared coding to self-driving cars. So first you have cruise control, right? So and then you got cruise control. It's dumb because it'll slam into the car in front of you. Then they came up with smart cruise control that'll adjust the speed. And then they came up with ones that are lane aware. And so cars would be aware when they're in a lane or out of a lane, and they'd actually self-steered or correct. And now you get to what Tesla just released. I mean, and it's almost as good as I would say a 16-year-old a kid driving the car. I mean, it's actually really good, changing lanes and everything. And so with some supervision, it's pretty good. And it's not too hard to imagine that I don't know how far off we are, but it's not too hard to imagine that this car can totally drive itself. And that's the same thing that's happening with coding right now, is that it was all humans. And now hey, I need a section of a code that can do this. And pretty soon we're going to get to the point where people are just describing what they want, and coding is going to all happen, and anybody's going to be able to code it. I feel, is there going to be jobs for people who are coders? They may change their jobs, but this AI transformation, that's just one area. And the same thing is going to happen in legal and in healthcare and just all these other jobs. I think it's going to have a tremendous transformation and be overall positive for us. But anyways, I digress.
Okay, so before you go to the other two stocks that I know we wanted to talk about, I'm going to throw you a curveball. Delta, Juliet, Tango.
Donald J. Trump.
How about that performance the last 3 days?
Yes.
It's gone from 40 to 70.
I think you can only describe this with one word, and that is huge.
So
Oh, it was so good. They all cried. They cried. They were crying. It was so good.
So the reason it came up on my Twitter feed again, I know it's a trending on Twitter, but interestingly, there was a chart. Zero Heads just tweeted 10 minutes ago. It is a massive gamma squeeze that's going on.
So there's options on this thing already?
0-day options on this thing. And the total of option volume on it has just exploded to the upside.
Well, Eric Baltunis and Bianco were having a tweet conversation, or whatever we call it now. How long before we get the triple inverse ETF on this?
The triple inverse ETF, yeah. All right, sorry,
It'll be out there soon. So
I didn't mean to bring up again an example of, in my opinion, speculative euphoria that's going on right now in the market in a company that has a negative 96 PE.
Greg, I was telling you before the show that my seasonal allergies are acting up, and I wasn't feeling very good. And I was feeling good as soon as we started rolling. Now I don't feel so good. I'm not saying anything about any political opinions or anything
All
there. It's,
right, all right.
the truth is, my headache's coming back now.
We'll move on. So you had a couple you wanted to look at. You with
Yes, this
Tesla.
small little so Tesla, which has been not doing so well. I wanted to point this out for a couple things. First of all, there is a big deal coming up on next. This is the end of the quarter, so Tesla releases quarterly numbers. We're seeing implied volatility very high right now on options. Um, I reading a couple of people that I think are pretty smart. One is Adam Jonas from Morgan Stanley. This just came out today, this afternoon. So he cuts delivery forecast to 425. So the street right now is at 462 quarterly deliveries, which is a pretty good number, but 425 is definitely a miss. Uh, and if the number comes out, if Wall Street doesn't recalibrate its forecast, we get a miss. Tesla can really take a beating. We had a really good move in Tesla this week. Some stuff about full self driving and the fact that Elon is requiring all salespeople now to demonstrate full self driving. It's a $12,000 add on and very high gross margin. So if they sell more of it, it could make a big deal. That's why we saw Tesla move up here. But I'm telling people to be cautious over the next week when we have these numbers, delivery numbers come out.
So, question that I'll have that I want to pose here, and this might be kind of a segue to the next stock we want to talk about as well, and that is, but the question's about Tesla still. I mean, looking at that chart, how much of the speculative move that has driven up Nvidia is just capital flowing out of companies like Tesla and Apple, for that matter, that have chased those stocks higher and flowed into Nvidia and Meta because it's just chasing return.
Yes,
And
it is interesting that if you look at those two charts, if you look at Tesla, and I mean, there's some more similarities. That doesn't look like if you look at the S&P 500. This is the S&P 500, and the thing that I was showing you earlier, there's a dichotomy that's happening. This is the blue line here is Apple, the green line is the S&P 500, and by and large they trended pretty close together. In fact, people would say Apple is the market, and wherever Apple goes, S&P 500 goes. And right around the January timeframe, there's no question by looking at this chart that there's a divergence now between these two companies. And here's Apple taking a dive. And I think the narrative is several different things. Part of it, like you said, this is Tesla chart. Here's Apple chart. Definitely taking a trend down. I hadn't actually thought about what you said, but it certainly, I think it holds water.
I mean, you look at the other two charts. You look at Nvidia, and I know Nvidia had a big run last year too. It didn't just start in January, but good grief, they're like up 80% year to date. Nvidia is.
Yeah.
And Meta, same story. I mean, Meta is up 40 some percent year to date just since January. And it does make you wonder if this is just movement of institutions that used to hold those two stocks that have said, I still want to be in big mega cap names, but I'm going to, change my bet from Apple and Tesla to Meta and Nvidia. I mean, a good example, I know he took some grief yesterday on Twitter, but Gene Munster is a guy that I've followed. I know you follow him and read his stuff. He's an analyst out there who's followed Apple for a long, long time. Actually admitted on CNBC yesterday that he does own Meta and Google, but he doesn't own Apple anymore. And he's
That's
recently
huge.
sold out of his Apple position, which is a big deal because he's owned Apple. He's been a huge Apple advocate for a decade, if not longer. And so, what is going on with Apple? Is is this just short term cash moving out? Is there a bigger story going on here? What do you
Well, I
think?
You're asking the question, but I already think I know what you're thinking, and I think it's AI. Apple has definitely missed the AI bus, and we hope and think. I mean, they canceled Project Titan, which was the car company, and sunk something like $10 billion into the car investment. And a big part of that was the self-driving automation, and AI was a big part of that. So they're saying they're going to take those people and repurpose them into AI. And I don't know if you heard about WDC, which is going to be this is the Worldwide Developers Conference, which is a big deal. And often they do product announcements. In June is when they're going to be having that event, and it's I forget the exact words, but they said it's going to be awesome. Something that begins with AI, with I, whatever the words were. So the invitation that went out said it's going to be awesome. I don't remember the word, but it's AI was clearly indicated is going to be the theme to June. So I don't think we're going to see any direction in Apple until June. If you look at analyst forecasts, and you got to take what analysts say with a grain of salt. They have different motives. Morningstar has a value of like 150, and I think Goldman Sachs is somewhere around 220. And this was just as of a few weeks ago, or maybe it was February the last time I looked at it. But they did take Apple off the conviction buy lists. That doesn't mean it's not a buy; it's still considered a buy. But Goldman Sachs has a conviction buy list of 25 companies, and they say these are the companies that's sort of where do I deploy capital now? You would go to the conviction buy list, and they did remove Apple as of March from that list. So Apple is starting to see downgrades here. I personally think it's overpriced, especially if you're going to take out any sort of thoughts on the future. I don't know how Apple monetizes AI. Now they are most respected company in the world. They have fantastic leadership. They have fantastic products. People love them. People put people get Apple logos tattooed on their bodies. So Apple's not going anywhere, and they're going to continue to dominate. I think iPhones and their personal computers are the best. iPads, I don't know how big that market is. Uh, I'm waiting to buy a watch, by the way, because I can't get an oxygen sensor right now on it, and I do use the oxygen sensor for data, important data. But because of this Massimo thing, so I'm bearish on Apple here. For now, at least until June. I can't see myself getting into a new bullish position here. What are your thoughts?
It's I don't disagree with you. I don't think you have to rush to be bullish on Apple either. They do have an earnings event in about 6 weeks, first week of May. That's a long ways out. So, and I agree. I don't see any major move coming from them because you have seen those negative types of market stories, like I mentioned with the Gene Munster story. The latest filing from Berkshire Hathaway showed that he actually sold that Buffett has reduced his position in Apple a little bit, although very minimal compared to his overall holdings.
1%.
But you don't see a lot of people pounding the table right now about, hey, you got to get into Apple after this sell-off. So I don't I don't know that you have to run in to go bullish on Apple right now because I agree with you on the fundamental issues. I'll also say this, that sometimes the best time to buy something is when it doesn't feel right.
Well, let's talk about that. I mean, what sort of trade ideas are compelling to you right now?
So I think credit spreads are a good trade right now. We looked up right before. I know we talked a little bit about the implied volatility in options in Apple right now in the options market, and it is a little high relative to where it normally would be in between an earnings cycle. So I think it's actually a decent trade to look at a credit spread. Now, whether that's a bull put or a bear call, I think either one of those would work. Maybe even an iron condor down at these levels. It's sitting right on support. Might be an interesting trade because of the high levels of implied volatility that exist currently. Of course, that if you have the idea of I wouldn't mind owning the shares right here, or taking the shares as an adjustment to my trade if it goes the wrong way, because it's down at these lower levels. It hasn't participated. And if it does start to take off bullishly, then I want to participate in the run. I actually think the Costanza trade that you've coined is a great trade for it right now.
Yeah, I think that's my inclination. Actually, when I look at implied volatility, there's actually more of a slight skew to the upside. So options that are higher are actually bringing in more of a premium than options that are lower. And what I would look at doing would be something like this, where
Yeah.
I would sell a 175, buy a 180. The break even is at 176.60. And if you add on the equity, you buy it, say at 175, when it gets to 175 would be a key point. You're in a trade that's going to be making at least $160. Then you got this extra long call. So if Apple explodes to the upside, this is showing a low probability trade now, but if the stock's at 175 or one or higher, this will be a high probability trade of you making money. So there's some other thought processes here of how you might adjust it, and there's more to this than what's going on here, because what do you do with the extra call, and what happens if it turns around and goes back down? All that needs to happen. But the other thought might be do both, do a credit spread, do some sort of an iron condor. That's a very low. Let's go down $5. So if you looked at this is a low probability iron condor, but the risk is really small. This iron condor here at with the shorts at 170, 175, that's a really tight range for the next month. You got a little more room to the downside. This is slightly delta negative iron condor, and then $5 away for the longs. And if you are willing to take ownership, you got a long put that's going to protect you on this side. And if you proactively buy it on that side, this could be creative, but all of these are predicated on the basis that you're willing to take ownership of shares. I like the other sort of idea. Sometimes I'll do something a little bit exploding. And if I can find a put that's on the downside, and this looks actually fairly compelling, is that maybe do some sort of a ratio spread where you do more credit spreads and use that to pay for a long put. And if Apple crashes down, now you're making a ton of money. Now, there's some other thoughts on how you'd adjust that. I think there's a lot of different ways to approach this, but I love this Costanza trade because even when I'm bullish, I still don't mind adjusting it. And I could easily change my position to be more bullish. And it would be based on some data that's going
Yeah.
to come out, and certainly something's going to happen by June in this trade. I mean, this is only April, so June is the WDC earnings is May 2nd. So I think you could do a couple of these trades before anything happens. So I think you're probably more likely. I think Apple's probably going to languish here, and the premium is a little bit higher. It's not Apple doesn't get really really high, and 20% implied volatility is not what we consider high implied volatility, but for Apple it is.
But
And
for Apple, it is.
this is a sentimental indicator right now telling you that people are nervous about Apple. That's not terribly nervous, but there's an uneasy queasy feeling. This blue line measures emotion. When it goes up, people are nervous. When it comes down, people feel better. And looking at this chart, you say, well, post earnings, we should probably be much lower. And
Well,
there's been,
post earnings and the S&P 500 and the Nasdaq all-time highs
yeah,
right now,
it
and the
should, yeah,
economy
exactly. So
booming.
this is not sort of, this is a VIX. It's technically not the VIX. There is actually an Apple VIX, but this is a volatility index that's just like the VIX. And so when things are really good, the VIX gets low. And so we're seeing relatively elevated, what I would expect it to be lower, to maybe be down here in the teens. And we've got this, notable for Apple at this point. So there is a little bit of extra premium in there if people are interested in that. So
So
I don't
the
want to
other
give away
thing
all
that
the
could be
secret
going
sauce,
on,
but what's
I was
what's
going to
that?
say, the other thing that could be going on is we could be seeing a passing of the baton from the leader for the last 15 years in the market to the next leaders of the market. And I remember back when Apple took that baton from General Electric, and from the likes of IBM and the likes of even Microsoft at the time. Now Microsoft has turned back around and become the market champion again, but not after some major changes at the company. I mean, some big shifts at the in the leadership role, the CEO position. The focus of the company went from just being a software downloaded on and a browser type of company to a much bigger uh, cloud-based company in Microsoft, and the real shift in what their focus was. And that might be what's required for Apple to not languish here for longer than just a few quarters. If we don't see some big changes, I agree with you at this developers conference this summer. Second half of this year may get ugly for Apple.
Yeah. Um, we'll have to see it. Looking at the market cap of Nvidia, $2.26 trillion. So it is
That's not that far behind Apple.
2.68 is Apple's, which is nothing to shake a stick at. I mean, that's 2.68 trillion is insane. We were all talking about 3 or 4 trillion. Was close to three, wasn't it?
Yeah.
I think it was back in December.
I actually think, yeah, it was above three. It
Was it
was
about three?
the
Okay.
first one to get above three, and then Microsoft went above three, and now Microsoft's still above three, and Apple is not anymore.
So Apple's market cap is falling, and Nvidia and other companies are doing well. So yeah, I love Apple, and I think you could do worse than owning Apple long term. It's a great company, and um, I mean, doing caller trades and covered calls. I collared it. Really glad that I did over this last earnings period, and so I'm made money even with it dropping down. So yeah,
Okay, well, we'll see how PCE comes out tomorrow. We'll look at
Friday.
what's
You're
that? Oh,
thinking
Friday, not
tomorrow's
tomorrow.
Friday because the market's closed on Friday, and
Yeah,
tomorrow's your Friday.
tomorrow is the last trading day of the week. Last chance we get with the market closed on Good Friday, and then we'll see how things react on Monday. Um, so we'll see.
Well, I wish you and Heather and the rest of the family a happy Easter.
The same. I'm also wish you a happy camping in your house.
Luckily, we're spending Easter at some other family's house. We're not
There
in.
you go. There you go.
All
All
right,
right.
my
Thanks.
friend.
Thanks, everybody. We'll see you all at the next one.
All right, bye.